What's up, guys? Welcome back to the channel. It's your boy Octavio Options back at it again with another video, guys. Welcome back, guys, and today I'm going to be teaching you my strategy and how to use my strategy with my indicator, guys. So I use many several things to my confluences to be able to see the market, read the market, and to be able to buy puts and call options. You know what I'm saying? And how I use my strategy. And definitely, guys. So let's get into this video, guys. I hope y'all enjoy this video, guys. If y'all need anything, comment down below, guys. I have a free Discord. I live trade every single day. Well, when the market's open, not during the weekends, but a free indicator, a free course I made, and a live trade with my indicator. Obviously, I've been using it for since I've started trading. And guys, let me tell y'all, it's a 90% win rate. I already dropped a video about my indicator and like how to use it, but this is a more clear version on how to use it. How I've been using it with all my confluences on 2024 S&P 500 and QQQs, or you know what I mean, any stock. So I have my level set. We can set these as our highs, and these are our sell highs up here. So every time the market goes up here to these highs, we like to sell. So you can see, look, we went to draw this liquidity up here at this order block. You can see that. You see that? We came and tried to touch it up here. See that right here? We touched it one time and got rejected off this order block, off this big order block. You can see that we got rejected. Not once, but twice, guys. And the second time was even worse. You can call this your ABC setup because we got rejected one time right here, second time right here, and your third move was your actual move to the downside. Look at that. See that? Alright, so we can get into this, and we're going to use this order block as an example to use my indicator and my how I use this strategy. So I would already see this order block within the market. So say the market opened right here, and this is pre-market right here. This is the pre-market, the day coming up. So it's, let's say it's Wednesday, right? This is Wednesday pre-market, and we're gonna play Wednesday. So we can see that Wednesday we gap all this down, and then we started to push up after finding our support at these lows down here from previous day. You can see where we pushed down here at these lows. We can just draw a line down here. We did not break under these lows, so that means we're gonna get drawn back to these liquidity highs up here, right? And you can see pre-market did the exact same thing. And where do we open? We open at exactly up at this order block, at this high, guys. And remember what I said, guys? Whenever we like to touch this order block, we like to sell. Not one time, not two times, but three times. We're going to exponentially sell downwards, guys. This is all about playing the trend, and the trend is your friend, and using the EMAs as an advantage to help you succeed in that. You know what I mean? So let's get into that. So you can see that we opened this day at this order block. This is our order block right here, these lines. Don't forget it, guys. High. This is our low candle right here, where we just absolutely dumped in this, my bad, not high. What I put high? Excuse me, low. Two lows and our high. And you can see where we open. Look, so when market opened, you would have told yourself, okay, I'm gonna be patient. Let's see how we open, and let's see how we start writing these EMAs, or how the market likes to move in a very volatile way when market opens. So y'all probably just wanna wait the first hour, 15 to 30 minutes, to see for a potential put or call option. You know what I'm saying? So you can see we just kind of I was looking for us to sell automatically, cause we open at this order block up here highs without sweeping lows. You see that? Without sweeping previous day lows. We already swept them on pre-market. Yes, we did, but we pushed up and we got rejected off previous highs. Yeah, off this previous high order block. If buyers wanted to step in, they would have kept this continuation higher highs to the upside to break above this order block to push up higher. You know what I'm trying to say? But we didn't. We absolutely just, look, we tapped into the second order block up here to the second highs, and we just got rejected one time, two times. Let me We got rejected 1 time, 2 times, 3 times, 4 times. Or you can say 1 time and then 2 times and then 3 times right here. And you can kind of form this as your double top. If you like kind of zoom out on the 15-minute, this is the order block right here. And this is a double top on the 15 minutes. Look at that double top. After that double top, look at that beautiful, just absolutely shit down to the lows. See what I'm trying to see what I'm saying? So we're at this playing at this order block. You don't wanna be buying into order blocks, or like when we're in order blocks, you don't want to be buying in an order block and waiting for like an exit, or like you predicting the move. So say you buy calls inside this order block and you wanted it to go up and it does this. No, you want to wait for a confirmation move either side of that order block for it to tell you what side it's gonna go. So if we would have broken above this order block, it would have been calls. But you can see we absolutely just got rejected. Formed a double top. Came up. Rejected. Sellers stemming. We just sweeping highs. Sweeping these highs order block like I said. You can see that we formed a double top. So after forming that double top, I'll draw this low. I'll draw this line of a low, and I would tell myself if we start breaking under this low, or if I see any lows, if I see any like candle structural close under this low, it would have been an exact like sell, like I would have bought put. You know what I'm saying? Cause what do we do right here? We swept highs, we got rejected. A confirmation for the second move, liquidity sweep down to the second, like break a structure, and you can see we broke structure right here with this low, with this exact low right here. We pushed up, got rejected, pushed down, and we continued down going lower. And look how beautifully that was. Look at that. Look how beautifully that was formed. So what you could have done is you could have told yourself, okay, look, we're writing the EMAs right now. At open, we wrote the EMAs. We got rejected off this order block high. Okay, you can see this. We got sellers are stepping in up here in these highs. Okay, we get a second rejection off those highs. That's 2 times confirmation already. Sellers are stepping in. So what you want to see is these lows get absolutely like murdered. And we have to break under this open candle structure, because if we would break under this candle structure, it would be drawn to this liquidity lows, this next pre-market lows, and then after that it would be this next lows, and then this next low from this gap up, and then continuation down low to these sweeping this pre-market lows. You know what I'm trying to tell y'all guys? So you can kind of start using these pre-market lows as levels and as a guide for like where the market is gonna move if it goes that way. You know what I'm trying to say? So you can see we bounced off of this low 1 time and got rejected off that breaker structure, and you could have gone like you could have entered short right there, knowing your EMAs as well went from a buy, double rejection, into a sell. Look at that. We crossed right here. Those are my EMA orbs. That's my 50 and my 20. So you would have entered right here, and a candle close above this structural high, above this low, would have been your stop loss, right? So you would have entered off of this liquidity. So you see this liquidity back down, and you would have entered off of this liquidity sweep back up. So you would have entered right here off of this liquidity sweep back up. See what I'm trying to tell y'all? Like that. And another thing that you'll know why we'll sweep lower is because if we go to the 3 minutes, go lower, you can see, probably the 1 minute. You can see on the 1 minute. Where that? Right here. You can see on the 1 minute how we beautifully just at open, we got rejected. Oh, this is the 1 minute. You can see that. And we rolled the EMAs at open and got rejected. Seller stepped in. Pushed the market down. My EMAs flipped. My EMAs flipped again. Forming that double top. Look at that. This is my high. No higher highs after this high. Those are higher low, higher lows. Lower lows, guys. Come on now. And you can see my EMAs crossed right here. off that second double high. See that? Higher, high, low, higher, low, low, low. See that? And then officially right here on the 1 minute, my EMA is crossed for a sell after crossing the orb right here. So my 20 and my 50 EMA orb crossed right here. So that told me sellers are stepping in to look out for a sell. And then I was looking for my 200 EMA and my EMA orbs to finally cross. And look at that. I was waiting for a confirmation. My EMA is crossed. And I was waiting for that liquidity drive back down lower. Look, we broke structure, breaking this previous market low. With this candle close under this low, sweeping back up. Sweeping, we broke this low. We broke this pre-market low with this candle close under it. We came back up with this liquidity sweep. We got rejected now 1 time, 2 times, but 3 times. 1, 2, 3. See that? You could have entered right here for a short. Like I said, your EMA's crossed. Not just that, but your EMA's orb crossed for a better confirmation. Your 200 EMA and your EMA orbs crossed. That's even a better confirmation, guys. It's just like a beautiful, 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 beautiful like trade right here. And you could have target, like I said, you would have target these pre-market lows. Let's draw a line down here if y'all can see where pre-market lows are at. That's my pre-market low. There you go. And that's what you would have done. Let me delete this. So you would have seen that rejection, not 1 time, but 2 times, but 3 times, and you would have ride this. So you would have seen, okay, what's the probability, or like how far do you think the market drops today? So in pre-market, I can see that we gapped from 519 all the way to 529. So what you could have done is, okay, I'm gonna buy. If we break this breaker structure low where I'm gonna enter, if we break this low, I'm going to buy a. You can target. You could have bought a 526 put. Whatever you're comfortable with, risk management or like option contracts wise, you could have target any of these strike prices, all in between from 519 all the way to 529, and you would have made money. You would have fucking made money. So let's say you see the us breaker structure right here of 528. You could have literally bought a 519 put and you would have gone in the fucking money in that day. And that's do you know how fucking, look at that. Look at that risk to reward ratio. That's a 26 to 31. That's crazy. With like all your confirmations checked off, EMA's crossed, double top, breaker structure, off of this low liquidity sweep, back up, enter right here. Sorry guys, I'm trying to there you go. Enter off of this rejection right here, boom. Write this down, you see this up, we got rejected off the 200 EMA. Remember, my 200 EMA is my red line, guys. And my EMA orb is my 20 and my 50 day. That's these 2 blue lines. You see that? We got rejected off my 200 EMA, and that's beautiful rejection, even better. And now you write your EMAs. Look at that. We came up, we came down, all the way down here. Found our lows all the way at 522. After breaking this support low at pre-market. See that? We came back up. And what do? We just got rejected off this liquidity right here. You can see right here. There's the liquidity right here. From this wick low to this wick right here. There's liquidity just sitting there. And what do? We came back into it, drawn into it, just to get rejected. We came back down. Look at that. Boom. Back down. With a 1 minute candle close under that previous low, breaking that structural low before market close. So we broke structure on the pre-market low. See that? We broke structure right around 220 at pre-market low, and then we came back up, swept this low that we got rejected off of. You see that? Well, not 1 time, not 2 times, but 3 times. And look, you see that? We just came back down, just lower. this would have been an absolutely beautiful trade retracement back to the pre-market lows. Like, look at this beautiful, beautiful trade right here, guys. You really, it doesn't get better than this, guys. Like I said, you just gotta follow your risk management, and you gotta like find these trades. These trades won't just come up to you. You gotta find these trades, and you gotta look at the market. Oh, excuse me, and look at the market and see how it's moving. Cause you would have made absolutely fucking banked if you would have bought any of these in between strikes from this 528 drop all the way to 519. It would have been fucking insane. And like I said, guys, you can get this indicator at the Discord down below, guys. It's completely free. It's all free, guys. And I made this indicator when I started trading, or like a year after I started trading and started learning this shit. And you know, boys, we got into it and we got into the grind, boys. And we into this shit, and now we up. We getting into it, boy. So you can see that, boys. You can see it just all matches up, and it's like it's all getting lined up. Like I said, the free indicator is down below, guys. If you have any questions, just shoot me a DM on the Discord. And there is a lot of fakes on Discord of me, so I would watch out for that. Make sure you're DMing the right person, DMing the right the right me. You know what I'm saying? So you can kind of just see, even just using my indicator and adding it, and making sure you have the right settings, like it's on the previous video, guys, on the first indicator. Well, I'll show you right now, but make sure you have the right settings for this indicator, guys, because you have to have the exact settings I have on. And honestly, I wouldn't worry about these arrows. These arrows kind of don't indicate much. It just indicates where like buyers are stepping in and where sellers are stepping in. So sellers stepped in at the lows, and you see we pushed up higher. You see what I'm saying? And then it's just something that you don't really have. I just really kind of don't pay attention to it. But you can just take it off if you want off your charts. But like I said, guys, this indicator is for free. It's down below. If you have any questions, you can see. Look right here, guys. You can see the pattern. We crossed right here off of market. We found our lows. We pushed up. Market drove up. Found support above pre-market highs off of this liquidity drop right here. Pushed up higher. And my EMAs crossed off of this double bottom. See that? And you could just ride the EMAs. Ride the EMAs. Higher highs. But as well, you know, use your support and resistance lines or however you trade. I use support and resistance, order blocks, fair value gaps. You can see, guys. You can see all that stuff. We had a fair value gap in between right here that was needing to get filled, and we just got rejected. Absolutely murdered. See that? You could have put this fair value gap right here, and you could have like seen that as a confluence. Oh, sellers are stepping in, and you could have just seen off of this breaker with more confluence just to buy puts. You know what I'm saying? And it's all there, boys. You just gotta line it up. You see my EMA's crossed, completely crashed. Not crashed, but we sold off. Look at that shit. Right at open, topped out. And what do? We just absolutely flushed down these lows at this EMA double bottom right here. See that? We kind of found support until we swept lower. Right here. Right here too. You can see we're just riding the 200 EMA. EMAs were bullish this day. So we just ride the EMAs. Right here we crossed previous day off of this drop. Remember this big ass drop? And we finally came up off of this liquidity sweep lows. My EMAs crossed. You could have gone for a quick scalp off this high right here. Breaking this high. EMAs crossed. Boom. What about this liquidity drop? Liquidity sweep. Candle close under this low, breaking this high. Back into this structural low would be our stop, and your target would be this this what you call it, the supply demand area right here where we came in and just swept it low. See what I'm trying to say? Right here you can see suppliers, sellers, suppliers, what the fuck? Sellers stepped in right here. EMA's crossed. I absolutely sold this shit. It went from 558 all the way down to 550. That's an $8 drop right there, guys. After my EMA's crossed to the downside, and you would have all what you've done is just ride the EMA's. Look at this shit. See that? Let's go bullish. Let's go more bullish into the market. Let's find some bullish momentum here. On the hourly, you can see we're crossing and we're just bullish on the hourly. See that we came back down, touched the EMAs on the 200. Boom, we checked it again, back to the upside, bullish, ride the EMAs. And then finally on the hourly, we crossed down and we rejected not one time but two times right here. And now, guys, look where we're sitting. We're sitting in this double top area. I mean, double bottom right here. See that? Double bottom right here. And now, let's see how where we end up this week. Either we push up and we fill this 550 area, or we push down lower and we sweep all of this low at 510s. You know what I'm trying to say? So, let's check out the Qs. Let's go over here on this side for the IWM, for the buys. You can see where my EMA's crossed. And we just set up for a fucking absolutely buy. Down here, you see that? Don't mind this. Don't worry about it. You see that where my EMA's crossed right here? You would have bought. Fucking exploded that next day. And, same thing right here. My EMA's crossed. You just gotta find these guys. EMA's crossed for sale. Boom, we swept those sales, swept the lows. My EMA's crossed back up, and you would ride the EMA's. That's a 214 all the way to 218 move. And then right here, we open and we ride my EMA's. Why? Because we're just bullish. See that? Boom. See that shit? Just riding the EMA's is crazy, boys. What else? What do you want me to show y'all? PayPal? I've kind of been trading PayPal. We've been setting up for a buy recently off of breaking the structural lows. You see that? We came down, swept these two lows, double bottom right here, came up, my EMA's crossed, and right here we came down, touched this EMA on the 200, and we absolutely imploded up. And where are we at right now? Guess where we at right now? We're touching the 200 EMA right now. We're not necessarily, but you know, we're there. On the 15-minute, we came back and we turned back bullish. Look how my EMA is crossed as well on the 15-minute. Look how beautiful that is. Delicioso. Nvidia 2, bro. Look at this shit. Right off of open right here on Thursday. You would have seen the EMAs crossed off pre-market. Wait for your liquidity sweep lows. You would have waited for the liquidity sweep lows. Sweep the lows on the pre-market. Look for breaker. Look for your open candle structural break. And that would have been this candle right here. This whole consolidation right here, you would wait for this liquidity drawn right here to this exponential move up higher to sweep these highs. See that? And you would have entered off of this high right here, sweeping this low. See that, guys? Push up higher. My EMA's crossed right here, like I said. And right your EMAs. Look how beautiful. My road, my 20, my 50 ADI EMA, just not like beautifully. Look at that. Until we broke under it, you would have taken TP right here, breaking under it. And the next day, you would have seen this pre-market move up. We pushed up higher. My EMA's crossed. Oh my God, that's a sell, right? That's a sell. You would have sold right here. You would have taken like a 103 put. So 105 to 103. You would have holding that to the previous day. See that? Oh, well, that's where we at right now. But you see how my EMA sold from 503 all the way to 03. So you would have taken profit. So this is an in and out trade right here. My EMA's crossed on the 3-minute. You would have bought at the 105. EMA's crossed. Boom. Sell at 103. That's still a kind of good. That's still a $3 move right there. You know what I'm saying? Let me show you a move over here. Look at this move right here, guys. Pre-market. We crossed the EMAs and the orb. Right at open. Look where we opened. Right on the EMAs, we opened and absolutely murdered the EMAs and just rode the EMAs. We went from 111 all the way to, damn, 118. And what do we do after that? Look at that shit. We still rode. That still went up. It gapped up from if so. Look. This is a perfect example right here. You would have bought right here. Say you were selling the EMA's cross, and I opened right here on Wednesday. You would have bought a call option on the 3 minute. You would just hold it. You say, okay, 111. I'm gonna buy a 115 call. Boom. You would hold it. You would have seen this whole. You would have been writing this whole shit. And you would have been in the money already from 15, 16, 17. That's $2 already in the money from close that day. And look where we opened. We opened all the way. We opened at 118. We came down to test that pre-market close. I mean previous day close. And we absolutely murdered those highs. And then we took out those highs and then we sold off after that. See that? And my EMAs crossed. My orb crossed. And look, we sold off after that. See that beautiful trade? See that, guys? My EMA's crossed. You would have set your breaker right here, breaking this structural low. You would have entered off this liquidity, sweep down to sweep high, to sweep down lower. Look at that. You would have read your EMAs, respected the EMAs and everything. You would have sold right here off of this kind of close above it. Or breaking, or seeing this double to support down here. Honestly, that's what I would have sold. But, like I said, guys. Oh, we got a new member, W. Welcome to the channel, my boy. Welcome. But this is the channel, guys. Welcome back to the channel. Well, what am I saying that for? But this is the channel right here, guys. We got the YouTube. We got the stock market news. We got the announcements. We got so much great shit here, guys, that, like, it's all free. It's all free and it's all here for y'all, guys. We have 100, more than 100 members. Now our goal is to get 200 members now. And this chat's active, chat. This chat's active. We got people collaborating, networking, doing that, you know, learning. We got so much free stuff. We got a free course. It's on the knowledge area. Look at that, guys. Look at that free course. We got a second free course coming up, and then we got my indicator right here, and I show like kind of examples as well on how my EMA works and my orb works on this indicator. And right here, here's the link for it. Like I said, it's in my Discord, guys. It's all free. I have shit ton of free education videos. Look through this shit. You know what I mean? Join it. If you're new here, guys, drop a like, subscribe, and thank you for watching. And I hope y'all enjoy this video. For the volume profile, you would buy it. Let me show y'all. Let me show where we at right now. So right now we're kind of at the point of control at this volume profile. This is my volume profile. So you can kind of see you would buy at the lows of the volume profile to sweep up to this point of control red line. And you would sell at the highs of this volume profile. You see at this high of the volume profile up here? This grayish area. We sold off. This is a sellers up here. You see that? On the volume profile, sold off on the pre-market, sold off. You know what I mean? Sellers are, you know, and we're just sitting right here at the point of control. And what do we do down here? There's nothing but buyers suppressing these low on the pre-market low and the volume profile lows. See that? We pushed up at the volume profile lows. Look at that. Pushed up. You see all that? Pushed up. This is the volume profile lows. Pushed up. See that, guys? Pushed up. And then we sold off at the top of it. You see that? Up here. This is the 1 hour, by the way. And what are we going to do right here? Where we at right now? We're just sitting in between. Like, this is like an out war right here. This is like who's gonna use it, you know what I'm saying? So it just all depends the day, where the day opens. So if the day like if market opens on the low of that volume profile, I'm expecting that volume profile to pick up and the market to push back up to the top of that volume profile that day. But if we market opens at the low, I mean at the high of that volume profile, I'm expecting the market to push down to the low of the point of control or to down lower to the lower of the volume profile. You know what I'm trying to say? So if we open up here at the volume profile, I would see this retrace back down to this volume profile down here and push down lower to this down here. And if we open down here, I'm expecting this volume profile to push up higher. You know what I mean? To up here. Um, there's a video that explains it a lot better on how to use a volume profile, guys. But that's how I use it. And you gotta use your fair value gaps, your point of controls, your open candle, break a structural. You gotta like know all that little stuff, guys, just to use all that little confluence stuff to be able to read the market and see the market. You know what I'm trying to say? Like I use a lot of little confluences, like the fair value gap, double tops, or like just candlestick patterns, fair value gaps, liquidity sweeps, order blocks, support, demand, supply resistance, whatever you wanna fucking call it, volume profile, major swing highs, major swing lows. I watch all that stuff, volume. I look for all that stuff, guys, before I enter a trade. And you have to have a trading plan, guys. You have to have a trading plan, and you have to be ready. Cause if not, if you're not ready, the market will absolutely crush you. Anyways, guys, I hope you enjoyed this video. Make sure to drop a like and subscribe, guys, and thank you for watching. Peace.